Yeah, good evening, everyone, and welcome to UDAAN by Sarthy Ventures. Apologies for the slight delay because of technical challenges. The session is also being uh, streamed on YouTube Live, so you can see the session there also. So the agenda is mainly for founders, so enough value for founders. But I know there are quite a few students. There are a good number of fans of both Avijit and Aswini Bajaj. So I know you want to learn, and students have that itch or that hunger to learn multiple things from valuation to financial modeling to product. So currently it is manageable. We've got less than 100. Yeah, but Meet will instruct you as we come closer to 100. Yeah? So a quick brief about myself and Sarthy Ventures. So Sarthy Ventures is a 4-year-old startup enablement firm, and we make startups fundable and fund investable startups. We've got 15 success stories of fundraised till more than 100 startups have done our Minds program. We've also set up in the US, so we become a bridge between Indian startups and US investors / US partners. And besides these two main programs, we also had the partner program, more as a giving back to the startup ecosystem, where we wanted to handhold them in their early stage struggles, because a founder is a maverick. He juggles with so many challenges at the same time, be it finance, HR, fundraise, marketing, product, people, right? So we said, can we relieve some of those challenges by curating the right partners? And that's how we've got almost 9 showcase partners today, and 2 key expert sessions by Avijit Dutta and Aswini Bajaj on product and finance part, right? So we'll be also posting a form for you in the comments. So if you have any requests or requirements going forward, also Sarthy is for you. We try to live up to the Sarthy name in whatever actions we take. So you can refer on to us going forward. Yeah. Rajesh is here from Team Sarthy, Priyanshu, and Meet. 3 of us. Plus, of course, there are other folks also, but these are the 3 key folks who are from Team Sarthy. Yeah. So I'll quickly introduce Avijit Dutta, who's been kind enough to take a session on product. And again, I believe product is the key of any startup, and it should be done in an agile, experimental, lean way, because there'll be a lot of trial and errors, lots of going 2 steps forward, 1 step back. And therefore, you should not exhaust all your resources, be it time, money, and that enthusiasm behind solving a problem as you build your product. So Arjit will share about that with us. He's a he runs his own design agency, and he's worked with 15 plus brands in creating visual narratives that captivate, engage, and inspire. And he's the founder of Nonlinear, which is a product consulting agency. He's a design thinking evangelist, and he's been in Samsung in that design thinking role for long. And he's also a speaker at IIT Mumbai, Kharagpur, Delhi, DU. He's a speaker at multiple forums regarding product and design thinking. Yeah, so over to you, Avijit. You can take your session for 15 to 20 minutes, followed by 10 minutes of Q&A, and I'll handle everyone as we go into the Q&A.
Sure. Thank you. Thanks, Girish. Thanks, Rajesh and Meet also, and the team, Sarthy, for having me here today. I have created a small presentation on the subject that I have given. I'm given. So I will share my screen. Give me a second. I think you need to allow me share my screen. One second.
Girish, you're on mute.
Yeah, it should allow automatically. Avijit, just try it. Share, and is it saying?
1 second.
Yeah. Yeah, we can see your screen, Avijit. Yeah.
You see my screen?
Yes.
Fantastic. Okay. So the topic of conversation today is how do we go from idea to a scalable product, and by creating MVPs and doing quick iterations. Now, I wanted to talk about this particular subject, not using any jargon, So therefore, I have resorted to a simple storytelling technique that we will follow. So let us imagine that there is a founder, okay? And the founder thinks that there is something called a green dot, which the market wants, or there is a user, let's say this guy, this yellow smiling guy, he's a potential user or a customer of a product called a green dot. Let's just imagine. And that's what the founder thinks. And so that I call it the hunch. Okay, so you as a founder, you have a hunch that there is something broken in the market, or there is a possibility, or there's a problem to be solved, there's something to be offered, and that is what you are dreaming. So I call this the next step or stage of the founder is that he has a dream, and he thinks that if I offer this green dot to this guy, he would love it, and therefore I would have a business, right? And from there, this founder, who's, I mean, I've tagged him as E, as entrepreneur. So this entrepreneur is smart, right? And therefore he knows that just the hunch and the dream is not enough. I need to translate my dream into an hypothesis. Why? Because if I convert my my hunch into an hypothesis, then I can test it, right? And then he asks, okay, do you really need a green dot or maybe a red one? And then there is a pool of people on the right side. You see that there are these, sets of users, customers. You can call them customer segments, blah, blah, blah. But then let's just call them the crowd or the market. And they have, some of them are curious. Some of them are naysayers. As you can see, the blue guy, he's not liking at all what he's seeing. But then the other guy, the yellow guy, is curious. The other guy is also, the green guy is neutral. But then I have a hypothesis, let's say, as a founder. What do I do then? So I feel that, okay, I need to start somewhere. And because the founder is smart, what he does is he picks up either of these two, the green dot or the red dot. He picks up the red dot and pushes it to the market. And typically we call it, the formal name would be a learning launch. So here we are not talking about this is my final product. We are saying that, okay, this is my hunch, and do you like it? Would you use it? Would you pay for it? There are many questions that I have in my mind as a founder. So I need to learn about the market, about the opportunity, and therefore I'm pushing it to you, Mr. User or Mr. Customer. Would you use it? That's the question he's asking. And then let's say, for the sake of this experiment that we are doing right now, let's say this entrepreneur has crafted the brand benefit story and the feature of his product, hypothetical product, let's say this box that we have here. And this has three attributes: the shape, the color, and the stroke or the border. Now here, in the first learning launch that we have seen, it's a circle, it's a red dot, it's a circle, the color is red, and there's no stroke. Let's say that those are my features. And visibly, this person who I'm making it for is not very impressed, right? He's seeing that, okay, my heart is broken, I expected something else. This is definitely not what I like, okay? So what happens? We said our entrepreneur is very smart. So he goes back to the drawing board and says, okay, fine, you don't like the red one, I have another one, which is the green dot. He pushes that green dot to green ball to the user or to the person. And you see, he's curious. And what happens is he says, nah, I don't like it. I like the color. Somehow I like the look and feel. So you can see an uptick in the product adaptation, let's say. There's a little bit of an uptick, but not quite, right? So therefore, what I did in my second learning launch is that I changed my color from red to teal, but I kept the circle as is, right? And I found that people don't like it. Then what do? As I said, the founder is very smart. So he found out between the red and the teal color, people like the teal more, but probably they didn't like the shape of the offering, which is a circle. So why not change it to a square? Let's see what happens. So he pushes a teal square to the people. Okay. Now you see the people have also changed. Like, so they have, this guy has grown a mustache now. Okay. Quite funny, but then he has his preferences and his tastes have changed, right? So it actually means that the customer landscape is constantly evolving. It's not the same. Okay, so that's my third launch, right? What happens? Okay, I see a little bit of an uptick, right? So maybe the number of people who are willing to talk to me on this product has increased. They're showing a little bit of interest. You can see the broken heart is a little, patched up. There is some uptick, right? So by the okay, if you have any question, please hold on to. I'll not take more than 10 minutes for this. We will address that later. Okay. So what I did was my first one, red, I removed the circle. I changed from circle to square, but I kept the color as is, right? And I saw some little bit of positive uptake in my product acceptance. But then because I said that the founder is again very smart. He thought, okay, fine, maybe the shape is something people are liking, and I know for sure the teal color people like, but I'm not quite sure whether the uptick is for the shape or for the color. So one way of finding out whether people like one particular attribute is to take away from the market. If I think that, let's say the teal color is something that people are liking more than the shape, which is a circle or a square, if I remove the teal, it should go down, right? So he's smart. He put a red square in front of the customer. And what happened? The heart was broken even farther, right? So this guy is visibly unhappy. And he says that, okay, I don't like it. So therefore, after this experimentation, the third or the fourth learning launch, the founder knows, okay, it's red is not going to work. I started with red, and then I again tested different shapes, and then now I know that red is not working. So then what do? Maybe I need to go back to my teal, right? The teal was a safe color, but then the shape is not, is it the shape or the color? We know that the teal is working. And then it's time for us to experiment a new shape, maybe a triangle. So we push a teal triangle to the market. And let's see what happens. That's my learning launch 5, right? And I see, oh, there's quite an uptake. So people are liking the teal. At the same time, they're liking the triangle. But then should I stop there? Our founder is very smart. He said, no, this uptake is not good enough. I cannot say that this uptake is something that proves the product market fit. It's not good enough. It is promising. So I should keep experimenting. So therefore, he experimented with the color again. Okay, kept the shape because he knows the square is not working, right? He put some other color, yellow. And let's see what happens. This is our learning launch number 6. And we see that, yes, there is quite a good response. This guy is very positive, and there's further uptake on my acceptance, right, of the product. Should I stop there or not? As I said, our founder is very smart. So he knows by this time, by the 6th launch, he knows that there are 2 things which is working for him. One, the teal color, and the second, the yellow color. At the same time, he knows that in the beginning, he had a hunch for a circle, right? So what he did was he introduced a new thing, which is the stroke or the border, which is, let's say, another dimension to the product. So we have a teal dot with a yellow stroke or a border. And then we push it to the market. What happens? And voila, we see that, yes, people do love it. And we have an uptick which we can call a product market fit, because people are not only using it, they're willing to pay for it, and they're also willing to spread the word in their network. They're proud of using this. There are many frameworks or many metrics that you can put in the evaluation of whether you have a true product market fit or it is just a promise, right? One of the framework is called a Delta 4 framework. It's something like, if you have, let's say, a new way of doing an old thing. Let's say, imagine Uber, okay? Imagine Uber. Before Uber or any aggregator, we used to stand on the road and stop a taxi, and if the taxi driver is in the mood, he would take us or not. But now, once we have Uber, we can, on a tap, we can discover the price, we can discover the timing, we can discover where is this guy, who's this guy who's driving me, all sort of stuff. And then let's say we also have bad experiences on Uber. Let's say somebody cancels, somebody takes you but then drops you in between, takes a longer route, blah blah blah, ask for money in cash, etc. There can be bad experience even on Uber platform. But even after that bad experience, would you go back to the old way of hailing a cab? Most of the people will not. So therefore, we have the experience. If you score the user experience without Uber, and then if you, let's say, get a score of 3 out of 10, and then if you with Uber you get let's say a 7 out of 10 or 7.5 out of 10, still the difference between 7.5 and 3 is about 4.5. So if this gap is more than 4, and this framework comes from the Cred founder, all of us know, right? So he has a very beautiful way of narrating this. But then I'm giving you this framework just to make us understand that when do we know that we have a product market fit and when we just have a promise. So here, if we get an uptick which is more than, let's say, a Delta 4 difference, then we know that we have hit something new, right? And let's say after 4 such pivots, you can call these changes as pivots, and then within one pivot, I might have multiple launches. So let's say from a red dot to a green dot or a teal dot, it's not much of a difference. I'm just changing a little bit. But then from a green dot to or a teal dot to a teal square, this is quite a difference because the shape is changing. So that's my second pivot. Similarly, the third pivot, the fourth pivot, and then I hit product market fit. And I know that the market wants a teal circle with a yellow border, right? So that's a new product discovery. Now, we can also see that this discovery did not happen in one day, right? And you can see in this table, it's a hypothetical, abstract story that I'm telling you. Our founder was very smart because he did a couple of things right to arrive at his product market fit. What are those 5 things? I want to tell you. Number 1, he never looked for a perfect product. He started with a useful hypothesis or a hunch, right? And he quickly moved into the market. And I would say that we can also learn from him and start with a useful starting point, move quickly from the hunch to the hypothesis, and avoid analysis paralysis. Second lesson from this particular story that we have from this very smart founder is that he did not say that, okay, this is my hunch and this is it. I need to somehow find a market for this. He did not say that. He said that I would iterate through learning launches. These launches are not final launches. The objective of these initial launches, the 0 to 1 founder knows that these are learning launches. So here, 2 things. 1, embrace the imperfections. We don't have to have a perfect product. We can go ahead and test it with in the market. Nobody is going to care much. Believe me, we are too minuscule in this whole world. So do not worry about imperfections. Embrace it. Okay. And if you do so, what happens is you can keep your cost of failures low. you have to understand that there would be multiple iterations and multiple failures along the way, failures within quotation. As long as we are learning from those failures, it's not a failure, because we know that we need to fail fast. And how do we keep the cost of failure low? By doing it quickly. Because if you take, let's say, for example, you have a seed fund, or you have some money that you are spending on this new product discovery, and you are taking, let's say, you know that you can run it for 12 months. And in 12 months, if you look for perfection, and then you take only one launch, you do at the end of 10th month, you do a launch and you figure out, oh my God, it's not working out. Okay. Is it better, or in 2 months you make one launch, and then take some lessons from that learning, and then launch one more product in another 60 days, another 60 days. So in 12 months, probably you can have 4 to 6 different iterations of your product. This is precisely what we have done here. So this founder has done exactly that, right? So if you can do that, you have increased your odds of becoming a successful entrepreneur, pushing a good product to the market. The third lesson that we have from here is the market will never really, the market will never reveal itself, or the users will never reveal their preferences in one shot. Okay. Because the users are very bad at it. You have to observe passively, actively. There are many methods. I'm not getting into those jargons, but then what we need to know, as these smart founder also knew, is that we need to embrace progressive elaboration, because that is how users and the market will reveal the true nature of that particular opportunity in front of us. So therefore, we need to be patient and we need to be consistent. Imagine if this guy left in between when this particular, let's say, this steel triangle failed, right? He was just one more step away from the PMF. If he had left it there, he would have lost a golden opportunity, right? So consistency and patience is extremely important. The fourth lesson that we get from this guy, the smart guy that we have here, is that, your idea is not your baby, okay? We keep there are many founders and many people talk about, oh, this is my baby, this is my idea, this is my life's lesson, I have to make it work, blah, blah, blah. Okay. Believe me, the truth is, not, the truth is farthest from that, right? So the moment I say my idea is my baby, my product is my baby, the first thing that I cannot do is kill it. But that is precisely what I might have to do. I might have to kill my own product before the market kills me, okay? And you can also, again, go back to the same diagram that I have here. How many times every learning launch is in a way killing all these yellow strikes that you see on the table, that this is something that I'm not going to continue. This is something I'm not going to continue. All these are nothing but the founder killed its own product, okay? So if you don't do that, what happens is you get married to it, and lo and behold, you lose your emotion. In the flow of emotion, you lose your logical mind, and then you allow the market to kill you. Okay, that's the fourth lesson. The fifth lesson that I want to leave with all of you, the last lesson, is that when you start a business, you start with a hunch, right? And you may or may not have some background to it, right? So there are many experienced entrepreneurs who come with, let's say, 5, 6, 10 years of experience working in that particular domain, and they actually know it. That's true. But then, a filled cup cannot be, filled more, right? So if your cup is full, and if you say that, okay, I know, the first response is, I know. There are many people you will see that, okay, can you do this? Can we do this? Oh, I know it. Yeah, I will do it. No, that's okay. I know it. So the moment you say that I know it, you are starting with a cup full of whatever. I'm not saying it's full of shit. I'm saying that there is some substance, right? So your cup is full. If your cup is full, you cannot learn about your user. You cannot learn about your market. So what happens is your past biases color your vision, and you only see what you want to see. So therefore, my humble and sincere request submission to all of you here is beware of your knowledge cars. This is called the knowledge cars. There is also another parallel I can give you. You will see that, many countries in Africa, they are extremely rich in natural resources. Why Africa? Come to our own country. See all the coal belts and all the steel belts that we have, all the mines. Do you see that those people, those places are developed? No. Most often you'll see that even though they are naturally endowed with a lot of resources, they are still having a very poor lifestyle, and poor quality of life. Why? It's called a resource scarce. So all I'm modifying this and saying that resource is knowledge in our case, and I'm calling it a knowledge curse. Do not fall into that trap, because if you do so, what happens is you color your vision and you dig your own grave. Okay. So the best thing that we can do is we can park our past knowledge where it is in the past, right? Because that can become our actual barrier. So 5 lessons quickly. Start with an useful starting point. Move from your hunch to hypothesis quickly. Avoid analysis paralysis. The second one, you know about the market using learning launches. Nothing is final. Do not, you should embrace imperfections and keep the cost of failure low. Third thing, the market and the users will reveal themselves in a progressive manner. So therefore, you should be patient and consistent with your launches. The fourth piece is that your product, your venture is not your baby. You should kill your product before the market kills you, right? And then you should build on the ashes of your own product, so to speak. And finally, you should empty your cup so that you can avoid knowledge cars and build something that learn something quickly about the market, about the users, and build something of use to them. So with that, I will pause here. If you have any questions, I am happy to answer.
Thanks, Avijit. It was quite an enlightening session from what should I say, that level. It's a very, and thanks for sharing about the iterative process of building the right product. And that's why the MVP word is so famous in the startup ecosystem. Many people don't live or understand it as well as the word has a meaning, minimum viable product, right? Such a strong word, but very few people live it or try to understand it. It's that hunger to give everything to the customer, and maybe they like something, but I'm not knowing what they like or what they don't like. So good, yeah. Thanks. We are open for questions. Do raise your hand and I'll hand over the mic to you. If anybody has any questions, we'll be taking max 3 questions which folks have on MVP, product development, or product market fit. Both are married to each other. If you have the right MVP, you can reach to product market fit. And then you keep adding features. Yeah. But very enlightening, Avijit. I really liked.
Thank you.
You can raise your hand if you have a question, and then I'll ask you to unmute. I'm seeing a few Priyanshu Kedia still. So request, I think, because of some bug in Zoom, it's naming you as Priyanshu Kedia. So do rename yourself. Yeah, open for questions. And you can raise your hand and ask a question. Okay, I'm still not able to see any raised hand. Yeah, go ahead, Vishal. You can ask your question.
Yeah, if you can open your video, that would be great.
You want to see the PPT? Okay.
No, I'm saying.
Hi, Avijit. Hi, Girish. So my question was, we are into a B2B marketplace and a B2C marketplace of footwear, and we initially tried launching only an MVP. But when we had a discussion with a manufacturer or a wholesaler or retailer who is logging into the app, so we faced circumstances that unless the entire happy flow is complete and unless he is able, even the seller is able to transact, even the buyer is able to transact, and even the wholesaler is able to trade in between. So that was not working. So currently we are working on launching the entire product now. So if you can guide up or throw some light on this topic.
Sure. Vishal, thanks for bringing in this topic. I must say that I should have included this. Very pertinent question. Like, what is that minimum, flow that we should cover in our MVP? So I can give you again, because I'm not getting into one specific example. I will again give you an analogy. So think about, if you are thinking about your dream, you remember the hunch and the dream, right? So your dream is to create a Ferrari, let's say. But then your MVP could be a cycle. Okay. So if you are, or let's say you are talking about creating a fast, very fast, two-wheeler, let's say. Okay. So your MVP cannot be a single tire or only the pedal or only the the driving seat. You understand what I'm saying? So the happy flow that you're talking about should consider an end-to-end value creation for the end user. So let's say if we are talking about let's say a vehicle, then somebody wants to move from point A to point B. That's the most essential and fundamental, non-compromisable value that the user is looking at, right? Now, if you say, here's one tire, you know what, I will make one more tire later and then I'll create a seat later in my third MVP. No, that's not the right definition. So your first release should have a very frugal version, maybe a skateboard, but the skateboard has very small tires and one plank. That's it. It's not a Ferrari, but then it still allows the user to move from point A to point B. Am I making sense to you? So
Yes,
the next iteration could be that, okay, you convert that skateboard into a cycle. And the next iteration could be that cycle into a electric bike. You understand what I'm saying?
Yes, I got it.
So when you are defining the MVP, the scope for the minimum viable product, you also should not, viability is just one dimension of innovation. Okay. So there is one more, three more dimensions to innovation. The first one is usability. Like, can the user use my product to a particular end? Meaning, in order to do some job. So there is another framework called the jobs to be done. You should research about it. Jobs to be done. There is one job that the user wants to do, and that job has to be done well, completely, even though in a frugal way. So that is how you define your happy flow and the iterations. Did I answer your question?
Yes, thank you.
Thank you.
Perfect, Avijit. Yeah, we have time for one more question for Avijit before we go to Aswini. Yeah. One more question on building your MVP, what to build, what not to build. Both are very crucial, critical questions in your choices you are making. Anyone? You can put in the comments or you raise your hands. We are also live streaming on YouTube Live, and we'll be in touch with you going forward. We'll share the recording with some of you who joined late. Perfect. Yeah, so no more questions, Avijit, I think. So we can go to the next speaker, and we'll surely encourage startups to build the MVP in the right form. As you rightly mentioned, not build just a tire and assume they have an MVP, and not build a full Ferrari also hoping that people will buy the Ferrari. Yeah, two extremes which we have. Yeah, Priyanshu, you have a question? It's showing Priyanshu to me because there are 10 Priyanshus here for a change. Go ahead, you can ask your question. We still have time for one question.
Yeah,
Hey,
good if you can also open your video.
yes. I think, I'm not Priyanshu, but I think it's showing me as Priyanshu. Hi, I'm Sivam. I just had a thought of while you were giving that example, maybe not the right thought, but I'll just share it anyway. So let's say in the MVP, you gave that a nice analogy of skateboard versus a Ferrari. Is it possible that if the customer is looking, the value itself is speed, let's say, right? That's what I want to show as a value. So what would be the MVP in that case? I mean, is there some thoughts? Yeah.
Yeah. So then, if the customer value is speed, of course, we are not talking about speed in what context? Are you talking about using manual labor, like your own efforts, then a skateboard is probably not a bad thing. Maybe you can use a jet in the skateboard, right? So you can have an attachment like a electric skateboard. You don't have to put in your effort, right? So that would increase the speed of the skateboard. But of course, that speed will not match with a F1 car, right? So you need to put it in the context. Now, the problem that we are solving and the person that we are solving the problem for, and the playing field that where that particular person uses that your product to solve a particular problem, or explore a possibility. It is not just about problem solving. It can be also exploring possibility. I'm happy with my current state, but I want to enhance it, let's say. Okay, if that is the case, then you should always put that metric of success that you're talking about, speed, in the context of the use. And then you will know what is the right one. So for example, in your case, if you are talking about speed and you're talking about hypersonic speed, and then we are talking about maybe a aircraft and not a skateboard. So the context is completely different, right?
Correct,
does it answer your question?
Yeah. I mean, what I'm still trying to understand is, so in that case, what would I end up building as my MVP? So if that is what is the value, because obviously I can't build a jet in the current state I am in. So
I also told you that the Delta 4 framework, right? So let's say the current, there is a current way of achieving some speed for me, and then you are giving me an alternative, right? So you are giving an alternative 1, alternative 1.1, 1.2, whatever, something, right? Now, if I rate my current way as 4, and you want me to switch, like there is a switching cost, right? That cost can be about effort, can be about capital investment, can be network effect. There are many other dimensions. But then you are asking me to switch lanes, like switch from product 1 or way of doing thing, which is the current status quo, from my status quo to a new way of doing things, right? Achieving speed. And if that experience that you are giving me in the alternate route is let's say at 5.5 and my current one is 4, and the difference is just 1.5, then I will not change. I will probably not change. It's not worth changing. But then if you're offering something fundamentally valuable in terms of speed, and then also cost and whatever trade-offs I have, and then my new experience is at 8.5. So now the difference is 8.5 minus 4, which is 4.5, which is a significant jump in my overall value creation, right? And therefore, I will switch, the switching cost for me justifies the switch, right?
So sorry, and just to follow up on a minor one on that, like sometimes is it also okay to show the MVP than to build it, or one has to go and build it already?
Of course, very good question. Shivam, thank you for bringing this again. Because again, I'm saying context is king here, okay? Let's say I am creating a new application for a fashion portal. Let's say, how do you shop online today? I'm creating a new experience. That is okay for you to build a prototype where the actual transaction does not go through. You are maybe using AI, you are helping them to select certain things and maybe speed up the exploration a little bit more, blah blah blah. Okay, so you can create a prototype, and that's okay. For testing as an MVP. However, let's say you are building the next search engine. So let's say Perplexity. Perplexity changed the way people search with AI, right? Before that, we were using Google, right? Or maybe Brave or any other search engine, but mostly we use Google. Let's say from Google, Perplexity thought that okay, no, there is a new way of search. And they just imagine, they come and say that, okay, this is my UI, this is the Figma prototype. You try this and tell me whether you like it. Seriously, you need to, in this kind of a situation, you need to show the result. Yes, the search actually happens. It is contextual. You can localize, you can do a lot of other stuff. So therefore, only a UI will not work for a new product like Perplexity, where it's a search engine we are talking about. You need to build an API. So therefore, you need to you need to start with coding in that case.
Correct.
But in the fashion e-commerce or fashion retail case, you may not start with coding. You start with the app itself, the experience itself. So again, context is king here. Whether you actually build the product or build a prototype which mimics the product, it depends on what nature of problem and what nature of experience you're trying to alter.
Yeah.
No, thank you so much.
Thanks,
Yeah.
thanks Avijit. Yeah, so we are ready to go to our next speaker, and really insightful discussion, and the questions were also very topical. So thanks to the folks. Request again to change your name. It's very easy. Just go to and rename yourself so that we can name you rightly. It's a bug in Zoom which has made so many people Priyanshu Kedia here. Priyanshu is a team member, by the way. Yeah. So we go to our next speaker and the next session for the day. And yeah, hi Ashwini. You can turn on your video so that people can see you.
Thank you, guys. Yeah.
Yeah. Thanks, Avijit. Yeah. Hi, Ashwini. Yeah.
Hi.
So I'll introduce Aswini first, and then I'll also introduce the topic. So Aswini is a BCom CA, CS, CFA, FRM, CAIA, CIPM, CFP, RV, CCRA, CIIB, CIRA, and AIM. And he's also a TEDx speaker. And he also holds the record for training the maximum number of finance students. He's a celebrity teacher. I think at least 20% of the audience is here just to listen to Aswini. Yeah. So welcome, Aswini, to today's session, and thanks for joining us. You're mute, I think.
No, am I audible now?
Yeah, you're audible now.
Am I audible?
Yes,
Oh,
you're audible. Okay, yeah. And the session today, Ashwini is also a consultant to businesses and financial advisors on building their financial model. Leveraged growth is the company name. And the key topic which startups struggled in the early stage is valuation and financial modeling, right? I must have seen umpteen Excel sheets saying 10x, 100x growth in year 5, year 6. And when you convert it to a target, that's the time when founders start to sweat that, okay, I have to achieve this also. I filled it in Excel, but now I have to achieve it also. So that's the learning of when to create the right financial model and when to value ourselves rightly at different stages of fundraise is the topic which Ashwini is going to touch. 15-20 minutes of a presentation followed by Q&A. Over to you, Ashwini. You can share the screen, Ashwini.
Thank you so much for that very warm welcome. Just a moment. Yeah. Is my screen now visible and I'm audible? Everybody?
Yes, Ashwini, you're audible and your screen is visible. Yeah.
Perfect. So, I come from a space of finance, and there's so much of numbers and finance and financial modeling and everything we talk about. But
Ashwini,
I'm
I
going
think
to
there's a
tell you.
network challenge from where you are because it's showing 3 red bars. So if you want, turn off the video till the network. Now it's fine, but it's coming red and white sometime because of the Wi-Fi. Just check it.
I think one second. From my end, the network is absolutely 100% good. So if you want, I'll switch off my video if you want that.
I think let's continue for a minute, 2 minutes. If I face audio challenge, then
Just stop me in between. Yeah.
Sure. Okay.
So actually, there's so much more that goes beyond the numbers. And there's so much that goes behind the numbers, which needs to be very, very well taken care of. So when you're putting together a pitch deck, let me just give you a rough overview. So when you're putting together the pitch deck and the financial model, the numbers, etc., are going to be requiring a lot of research to be done. The financial model is going to be maybe 10% of the entire work. 80% or 90% is going to be research. And again, 80% or 75% is research, and 20% of the work is going to be your pitch deck part. So the research becomes the most important aspect because when we are putting out a number, when we are giving any kind of taking any assumption with regards to growth or with regards where an investor is asking you questions, you have to be in a position to be able to answer every single question and back it up. So it cannot be a very, very, what do you say? It cannot be a casual kind of an approach where you're giving any numbers, where you're putting out any numbers and all. So that we need to be very careful about. So moving forward, so when we're looking at it, a lot of people start with, the projections 100x, 10x, as Girish was just mentioning about it right now. So people talk about that, if I'm going to be catering to India, there's a 140 crore population, and then 1% or 1% market mujhe mil jayega. If I get the market like that, I'll be able to cater. But out of 140 crore people, probably 2 crore or 3 crore people are paying taxes. So if your product is such which is only going to be able to cater to the tax paying audience, let's say, then you cannot say that I'm catering to the entire 140 crore of population. And the investors have heard a lot of stories. So we, as when we are pitching, we need to be very careful and understand that these investors are as well very seasoned. They have seen umpteen number of presentations. So we need to be very careful when we are putting out our numbers in pitch deck and all. So you have to really identify your target audience, and you have to be very careful with your market size and everything that you're portraying over here. Because for your product, for your kind of range of product, what kind of audience would you be able to cater to? Be a little realistic, because Sam, Som, and then when people get to the revenue numbers and all, revenue projection is basically where we start. So any financial model, the first thing is going to be, you are supposed to be projecting revenue. And with the revenue projection, then you're going to be drilling down to the bottom line, that is your profit value. So everything else in terms of cost, etc., if I know the size or the volume I'm going to be selling, I will be able to derive the cost part. It is not be that inaccurate. The inaccuracy is generally going to be, of course, the cost was also generally understated, I'll tell you. And the investors, everybody knows that, the kind of cost that you will be estimating and what you're actually going to be realizing is going to be quite off. But the sales is the first part. And based on sales, the entire line items, and you move down to the bottom line. So because of that, it becomes very important that your revenue number is very, very good. And to get to the revenue number again, so your pitch deck, your financial model, and your business or your business idea, they have to be in sync with each other. Because if they are in sync, you will be able to convince the investor very easily. And then because then your idea is making sense, because it is all coming together cohesively. In the sense that if I'm going to say that I'm going to be targeting this sales and I'm going to get this kind of market share, but do you have a moat of the business around? Like this water body is known as a moat. What if somebody else captures a part of your business? How do you go about it then? In fact, in the morning, we were discussing in a conversation we were having about somebody investing in a biotech company, and we were and there were some challenges coming with patent in different multiple countries. So one is the understanding of biotech, because that person does not come from that background, and second is having an understanding whether you will be able to get patent in multiple countries or not. If not, then your moat shrinks. So you're being able to achieve your sales and the projection ki nahi aadmi aayega mujhse kharidega, people are going to be buying products from me, I am going to be able to make those sales, is going to depend on what is your moat. Why will people come to you? So that business strategy and your sales and sales growth number has to be in sync again. And that has to be visible. Your moat has to be visible in the pitch deck, and that has to reflect the growth number on your financial model. So then when you're making, a lot of people make a lot of big promises, but what also the startup needs to see is how are you going to be going about your milestones. So are you going to be in a position where you are going to be able to go with an MVP, a minimum viable product? Or is your startup going to take too much time? There are a lot of startups which have promised something in 6 months, 8 months, and they're not even being able to roll out in 2 years. So in what phases can you launch and work with your startup? Because when you're asking for fundraise, you have to give them a projection in milestones that in 3 months, 6 months, 8 months, what am I going to do? And based on your milestones for 3 months, 6 months, 8 months, you will also have to your financial projections that is generally made. So in the first couple of years, we generally make on a quarterly basis, at least, if not monthly, but at least quarterly. We don't give an annual projection immediately. We make quarterly projection to the minimum, right? So for that, it has to be in sync with the milestone level. Now, people are not just looking at revenue, they're also looking at bottom line. That was probably in the 2014, 15, 16 or so, where people were just getting, swayed by the numbers or subscribers or revenue numbers, or not even revenue, free subscribers, etc. But that is not going to work. In your model, in your business model, what are the options in terms of pivoting? Because that tells me about the risk part. So not very exactly related to the financial model, because in the financial model that I'm putting together, I am going to be generally talking about the line or the way I want to do the business, and not say that, okay, after 6 months, if this does not work out, I'll do that. So this will not come generally in the financial model. But yes, the pivot part you can use as byproduct revenue. So the more various ways in which you can generate revenue, if that is something that you can show to the investor, that works well. So your other income, etc., can come in. Also, what happens is when you're putting the pitch deck together and the pitch deck together, generally people want to invest in companies where there is at least one co-founder, as in there are two founders at least. Because one person, again, juggling with so many things becomes a bit of a challenge. In your pitch deck, you try to put your sample slides, sample, or what do you call it, a mock-up or something of your product, if that is a tech product or something, because it always helps. So somebody, again, I was evaluating one of the startups just a week back, and they had a product demo video that really makes it very easy to understand for the investor as to what is there. So UI, UX, etc. becomes very important. And you have to know every single detail about your company that you're pitching. So when I am giving a projection for a particular company, that projection, do I have the backing of every single assumption that I have taken? You cannot say that this assumption is just from this random report and have no actual logic that, okay, this is a report that is saying that this will be the growth rate of this industry, but I am going to get this growth rate because of A, B, C, and D, and with respect to the competition. So the financial model is just a numerical financial representation of what you are going to be doing for the next couple of years, few years, and how you are going to be going about it, whether that is reflected in the sales cost and all. So if you don't have that background ready and answers ready for every single number, and if you try to pitch that tech and all, it does not work. What is the kind of dilution you're looking at? You have to be very careful whether you're trying to dilute more or dilute less. So if you try to dilute more, at times the investors are not very happy, because they would also want you to be more possessive about the business, because you're the one who's actually going to be running the business rather than the other side. And so so this is just a summary. I'll get back to that. Financial model wise. So again, why do you need the financial model? Because a lot of times people say that it is, it depends on their negotiation part, which is true. But at the same time, people still want to have an understanding of numbers. Now, a lot of times, depending on the stage of the startup, at the earlier stages is generally the multiple that works. Generally, a sales multiple is what we use. But even then, the DCF would be needed. Now, the DCF, again, it serves a couple of purposes. One, the regulatory part. So wherever there is any kind of filing, etc. needed, and if the DCF is required for it. And second, also what happens is that when you're putting the story together in your pitch deck, how to translate that story into numbers, financial numbers. When I say numbers, I'm talking about money. So how do you translate that story that, okay, next 3 years, we are going to do this, we'll achieve this and that. But how does that story look like in financially is what I need the pitch deck for. So maybe the deal I'll be doing on a multiple base, but the DCF is still going to be needed to understand that. So as I told you, research and analysis is 90% of the work, and the putting the model together is going to be 10%. The research has to be very thorough, and it is not just like, okay, sales bata diya and all. It has to be sales, your cost drivers, your business model, your marketing strategy. Because if you're saying I'm going to be projecting and getting this kind of growth rate in my sales, how do you, is it in sync with the marketing strategy? Is it making sense with the kind of CAC you're going to be incurring? So will you be able to achieve that kind of growth estimate that is there with the marketing strategy that you have or not? So we have to figure out all these cases. Now, the assumptions that we take is the most important. So your growth assumptions, your units price, so whatever level at which you can disintegrate. So if you have multiple kind of products, the price per unit, the product per unit, considering possibly the inflation levels also at very early stage startups, we may not be doing that level of work. It depends, again, the kind of extensive model you want, and the amount of what do you call it, what is the level of complexity and the stage of your startup right now. It'll depend also on that. And when we are putting the numbers together, so a lot of people, we cannot make mistakes with FCFF, FCFE, etc. calculations. Discounted cash flows, basically you're discounting the future projected cash flows and getting the valuation done today. For startups, we use the FCFF approach and not the FCFE or approach. Again, the debt structure, I'm assuming that the debt is not going to be there at the early stages of investment, so as to say. So we do the projections, we get the company valuation, and we do a lot of scenario analysis also by changing these growth rates. That under different combination of growth rate and certain assumptions. Let's say I have 5 assumptions. So I will create, let's say, 5 or 7 cases with different permutation combination of those 5 or 7 assumptions, and see how the output is looking like. So that the investors prepared that in each of those scenarios, what is the kind of value they are going to be able to look at. Now the role of the founders, how the founders are going to be working towards it. You have to be very comfortable, and it should not show on your face also when you're doing the negotiation with the investors. If you're not liking something, what if they give you suggestions about, what if you're planning to do the business this way, or what if this model is applied, whether it will work in this case or not. So you have to be a little open to discussing those viewpoints. You can always state that we are not doing so and so because of this reason, or we are planning to do it, but at a later stage, or why your competitors doing and you not doing, etc. And you need to be as honest and transparent as possible. Of course, the investors also know that there is a certain level of exaggeration that is going to go on when you're putting the financial model and the deck together. Not that we are doing it deliberately, but we are also very optimistic. We put everything together into that deck. But at the same time, that is the reason why I said that the amount of research required is going to be very thorough. Because although the investors also know and you also know that we are being a little over optimistic, or we are being a little we might exaggerate the numbers a little bit in terms of, because we know ki negotiation hoga, the kind of deal I'm doing, I might have to bargain the deal and all. But with the conviction that you have in terms of your numbers, the research, the backing of your growth assumptions, etc., that makes a lot of difference. There are a lot of biases and all. So I'm not sure if we need to, I'm not sure if I have extra time for this, or we want to spend more time in terms of doing the Q&A. So I'll just very quickly, briefly run through it. So at times we get overconfident. So investors also, especially this bias, we have to evaluate in the second or the third round of funding and all, wherein, because you might be, these investors also might be having access to your 1 year earlier deck and all. And now you have 1 year more data. So we have an actual budget and budgeted and actual, or the past year projection now becomes the 1 year actual data you have. So how you compare those data and how it is working out together. Then we also have to see the trends and all. So there are certain industries which are getting higher valuation. There are certain industries at times are not getting a good valuation in terms of, so the trends and all are going to be there. There's nothing we can do about it. There is going to be, one second. Yeah, there is going to be your, with the valuations and all. So be as ethical as possible. And that is why getting an independent valuation and all helps. Next is your assumptions and all. So at times what happens is we might be using and just updating the previous older deck for a while, but at times you might need a fresh set of eyes on the deck. So when we keep on updating the deck, maybe my model or my work has changed quite significantly in the last 1 year, but I've not done a deck from scratch in the 1 year, but I've been continuously tweaking the previous one. So I don't know if you're, if you're if you know about this ship of Ulysses, Theseus. So the entire ship changes. I just read about it. I don't want to spend time on that. And encouraging diverse viewpoints, having a proper discussion. I think this is not relevant. Yeah. So that's more or less from my side on the financial model bit. Any questions? I wanted to keep more time for the question and stick to the timing. I hope I'm on time.
Perfect, Aswini. You're perfectly on time. Yeah. In fact, I could see a common between Avijit and you when you were talking about biases, or Avijit also saying don't fall in love with the product you are building because you're going to take 2 steps back and 1 step forward. That's the model.
Yeah.
So in fact, biases is a whole PhD in itself, with so many folks writing about noise, and Daniel Kahneman written so much about so many different biases which we humans have. Sometimes it's tough to even imagine how we are forecasting and even predicting wars, World War III and this.
Yes.
So it's really great to know that. Yeah. So thanks, Aswini. Yeah, we are open for questions. Again, we'll have 3 questions before we go to the next part of the session. Yeah. Just raise your hand and then we can pose the question to Aswini on financial modeling / valuation / negotiation / stage of your company. What is relevant? What is necessary? Shumate, Vishal, I'll prefer to give someone else first, then I'll come to you because you asked your question on the next previous speaker. Anyone else? Yeah, anyone else wants to ask a question? Yeah, go ahead. You can ask because your name is coming Priyanshu Kedia, so that's bugging me. But go ahead, you can ask your question to the person who raised his hand. How do we value a startup NBFC? Yeah, go ahead, you can ask. Yeah.
Yes. So my name is Anupama Bhatt. My startup is
Turn on your video, please. Turn on your video if you don't mind. Yeah.
Sorry, I'm outside actually.
No issues. Go ahead. Anupama,
yeah.
go ahead. Anupama,
so my product is a smart ring. So the thing is, we plan to launch in US and Europe as well. The thing is, for US market, there are different regulatory approvals like FCC, FDA, etc. So how do we do our projections of revenue based on, because I'm not sure how much time it may take to get the approval.
So this is smart ring, not NBFC. Sorry, I saw somebody type
No,
NBFC
NBFC is a
in the
different
chat.
question. Yeah, different question. This is smart ring. Yeah.
All right. Okay. So, okay, it's a bit difficult to say in terms of the revenue projection because then your timelines are something that is not sacrosanct. That's not frozen yet because these
Right.
things do take time, and in the US it takes even more time. So, you will have to see the average time in which normally these kind of approvals are done. Generally, people are going to be on the optimistic side, wherein they will be very sure that in my first application, I'm going to get the approvals because I will have the right consultant in terms of getting all the paperwork, etc. done. So, assuming what is an average time, normally, say, for example, people might say that, in process is 3 months, but with experience, people will say that it takes around 4.5 months to get all the approval and paperwork done, or 5 months. So we can maybe add another month or so in order to be conservative, but you take that 5-6 months of the time frame in terms of the approvals part.
Okay.
Production etc. process you'll have to evaluate. So this is also going to be on the projection basis in terms of the time frame. And from that, the sales part again, generally it starts at a lower number. And that is why in the beginning time frames, people also get 100%, 200, 500% growth rate on a quarter-on-quarter basis and all. That is because you're starting with very small numbers in hundreds or thousands. So at that level, that kind of growth rate is very feasible, very much possible. And
Okay.
that growth rate again will depend on how many people are consuming it and how differentiated your product is and how much of a moat do you have. So that is when we have to look at and what is the kind of numbers the competition is getting already, and whether you have a price competition or a differentiation or both. So the more conviction, I mean, if I have a price point which is cheaper and I have a better product, then obviously I can estimate that I'll be able to capture the market faster. So that is the reason why we have to study the brand and the existing competition in the market. Based on that, we will be able to start making the projections.
Okay. Thank you.
Thanks. So the NBFC question we can take now. Someone had an NBFC question. If you can turn on your video and speak.
So how do we value a startup NBFC? So to answer your question, it's a bit tough to answer this because NBFC itself becomes a very broad space. So, for example, if somebody talks about fintech, credit tech, etc., there's too much. There's quite a lot of aspects in it. And so, I mean, out of India, what are you looking at in terms of NBFC? I'm not very sure. But bank's balance sheet or an NBFC's balance sheet PL account is going to be a little different as compared to what is there in the other regular service or manufacturing companies and all. The entire financial and the metrics is going to be a little different. And the regulation part also comes in. So so the valuation is again going to be done in terms of projections and all, but it is going to be very specific to the business idea that you have and the kind of reserves we'll need. And a lot of regulatory aspect needs to be considered when you're doing the valuation. So this becomes a very specialized kind of valuation that needs to be done. And I'm not sure if I can give you a immediate answer to this. Because the ratios also that we'll have to look is going to be very different. It's not going to be more of sales. It's going to be the AUM or the funds lent out or so. So your entire thing comes on that. And then what is the kind of work you're doing based on that? We'll have to do PD, probability of default, etc. projections. So that also becomes a bit of a challenge. So based on those factors, we'll be able to come to that. So you'll need a proper I would say very detailed regulatory, considerations included valuation projection that you'll have to make for an NBFC.
Ashwini, does that only leverage growth? He asks a lot of questions to build the right strategy, followed by the financial modeling, and he's also done it for a few of our startups. So it's a long-term, it's not an impromptu answer. You'll have to actually go through the journey, get the right answer valuation. Yeah. There's one more on agri-fintech, Ashwini. You want to take it?
Yeah.
It's in the comments.
Yes. So the question, I'll just read it out for everyone else over here. How do you value an agri-fintech, which is at a pre-revenue stage, is actually a very interesting space. I've seen a couple of projects come in this space. It is at an MVP stage. Over here again, it is going to be, see, the DCF is going to be very less, I would say, detailed, or it'll be very rudimentary that you do at a pre-revenue stage. There are going to be a basic projection based on which we can do the DCF. And based on your sales or projected sales and all, you will have to come up with a multiple that is there in the industry right now. Based on that, normally your valuation and your transaction happens because at this particular stage, it will be more of friends, family round, etc., and very early stage angel investing that is going to be happening at this level. So again, that again creates a problem that you need more money to start right now. and you do not want to give so much of your stake at this moment, because later rounds you will barely be left, or your dilution will become too much. That is the reason why this entire ecosystem is there in terms of guiding you towards how you should dilute and how much you should dilute at each stage. But agri fintech pre-revenue stage, you will have to have a number based again on the kind of business you're doing and what is your target market. Based on that, you might be having a sales number in mind for the next 6 months, 1 year or so, ideally within the next 12 months time frame. Based on that and the multiple that is prevailing in the market, that is why I told you about what is the kind of multiples that is prevailing in the market right now. Based those multiples, because right now, for example, edtech is not doing well. It's still picked up in the last 4 to 5 months. So there are going to be phases in the market where certain industries might get a higher multiple as compared to the others. Agri fintech is doing okay. Agri was really in a hyped mode, I think 3 years back, 2 years back, 2.5 years back or so. Even right now, it's doing okay. And agri fintech is also a good space. So depending on the current multiple is what you will get the valuation. And the DCF, as I told you, will be more basic in nature, not too detailed at this stage.
Yeah, we can have one last question. I think, Vishal, over to you. You can ask your question, Vishal.
I think so. It got answered from the pre-revenue stage of.
Just your voice is very low, Vishal. Just come closer to the mic.
I think it got answered from the pre-revenue
Vishal got
stage.
answered. Very good. Very good. Yeah. Anyone else has any last question for Aswini? No? Okay. So thanks, Aswini. It was a really enlightening session for everyone, and I'm hoping some of your students are also there who would have learned financial the top line at a high level. How is financial modeling and valuation done? Okay. Thanks, Aswini. Yeah. So we'll go to the next part now of our session, where we have 9 partners. So we are giving spotlight to 9 partners who are from HR to finance to product to marketing. We had 2 keynote speakers. Now we'll have 9 partners sharing about their what work they do and how they can support startups in this. Right. So we'll start with Sharath from the Startup Zone. Each partner gets 5 minutes to share about how they can support startups and how they are supporting startups. If you can give so elevator pitch in 5 minutes. And Meet, you have to keep the timer. If it's 4 minutes over, you can just tell them 60 seconds. But just give an elevator pitch, starting with Startup Zone, followed by PHP Poets, Rathaga, right? That's the order 3 I've given you. Then I'll give you 3 more. And I'm also sharing a form in the comments. If you believe you need to Avijit's help for product, or Aswini's help for finance, or any of the partners' help in HR or US outreach, you can reach out to them. Okay? So over to you, Sharath. You can share about the Startup Zone.
Yeah. Good evening, everyone. My name is Sharath. I'm the CEO of the Startup Zone. We are a one-stop solution for entrepreneurs looking to start, manage, and scale their business in India. Since 2015, we have helped thousands of startups navigate the complexities of legal, financial, and regulatory compliance so that they can focus on what truly matters, which is building and growing the business. So starting a business in India can be very overwhelming. Founders struggle with multiple registrations, legal formalities, taxation, compliance, which can really slow them down or even put their business at risk. Many founders waste time and resources trying to figure out the regulations instead of focusing on their core business. So that's where Startup Zone comes in. We simplify and streamline the entire business setup and the compliance process, offering right from company incorporation to all kind of tax registrations, filings, accounting, taxation, audit services, legal documentation, intellectual property registration, and investment advisory services. We take care of all the statutory and legal requirements so founders can focus on scaling their startups with confidence. So how are we different from competition? So it is a tailor-made, suited approach for startups, not only in India, but also abroad. We have a dedicated team which works on your side. We are like your partners more than service providers. So over the past 9 years, we have supported thousands of startups across multiple industries, saving not only time, effort, and legal headaches. Our expertise ensures 100% compliance, avoiding any penalties or legal roadblocks. So many of our own startups have gone on to become funded startups and established businesses. So if you're an entrepreneur looking for a trusted partner, we could possibly handle all the legal and financial needs. So let's connect. So the form is available, as Mr. Girish said. So feel free to reach out to us. We'll ensure that you can focus on your business and we can build a very strong foundation for your business.
Thank you, Sharad. You are perfectly on time. Yeah, Ankit from PHP Poets. Yeah, Ankit, you're mute.
Hi, Girish. Thank you for the opportunity.
Yeah, go ahead.
Just to give you a brief. So, hello everyone. I'm Ankit Sisodia from PHP Poets IT Solutions Private Limited. Basically, we are based in Udaipur, city of lakes. It is in Rajasthan. So our company is past. It is more than 12 years. I'm been working with the PHP Poets as a part of a founder. So currently, what startups, mostly startups, has the challenge of budget constraints, scaling issues, limited digital presence, operations issues, lack of brand awareness, and tech. To meet this, all the challenges, we are providing custom software development solutions. Software development solutions starting from 50,000 to 5 lakhs, 10 lakhs, 15 lakhs, which includes CRM, ERP, and everything. UI UX design for the software development as well. Now, coming to the mobile app development, we have built many custom applications for the startup. It's initially for the logistic app, or there's an e-commerce app, or any custom application which we need, whether it is in Android or iOS. Now there is a hybrid apps are also working, and which works on React Native or Flutter. So we are working on that particular as well. Technology, we have been working on the React Native, Flutter, Swift, Kotlin, which I have already shared. You can see my screen, right?
No, not yet. You not share the screen.
Oh,
Okay.
sorry. Okay. Now you can see my screen.
Yeah, we can see your screen. Okay. But you understood what you're doing, Ankit. So anything related to technology, app side, or UI UX side?
Yes.
Or
Now
web page
coming to
side?
the e-commerce, so this is the custom software development or what services we are providing. Then there is a mobile application development which we are providing. E-commerce development from small to big e-commerce, we are working with the startups to build their product. Then the hosting and the cloud hosting. This is the major impact where a person needs a technical guy to handle their web hosting and handle their server part. Social media marketing, which comes into Facebook, Instagram, Twitter, LinkedIn, YouTube, Pinterest, making the presence on the social media, creating videos, post, running ads. Search engine optimization. This is a key factor to just grow your business. You need to be present on Google or Yahoo or any search engine so that someone can search. They can your profile or your website can be visible and they can directly redirect to your platform. Search engine marketing, paid ads on Google Ads, Facebook, Instagram, YouTube. So this all services we are providing to end-to-end solutions, starting from scratch, from building the product and to end the product. We are building this. 13 years of
And they're
experience.
also doing it for global customers. In fact,
Yes.
PHP
So
Poets has got customers
currently we are
across.
working with India, USA, Dubai, Canada, and Uganda. So our customers are based on this location. These are
Sitting
all.
in Rajkot. So really nice, Ankit. Yeah, and we'll pause here, Ankit. Yeah, thanks. So if you need any of Ankit's, you can get in touch with him, or you can fill the form. Yeah, we can go to Kathaga. Sonali, you can share your screen, or if you have elevator pitch without screen, also it's fine. Sonali.
Yeah, can you hear me?
Yeah, we can hear you, Sonali.
Yeah. Hi, hello everyone. Good evening. My name is Sonali, and I run a content writing agency. It's called KKG. We are based in Mumbai and we are in operations since past 7 years now. Basically, we create content or write content for brands. We have two divisions, animation and corporate. So basically, whenever it comes to startup content, why does a startup need content? It's not only having a website or a social media presence. It's all about creating credibility, attracting customers, establishing authority in the market. Okay, there are various other reasons. The first reason is brand awareness and visibility. A startup usually struggles to get noticed. Content marketing with your blogs, social media, videos, public relation articles, etc., helps a startup to establish the presence and attract potential customers. Then building credibility and trust. When you are present on social media, people are talking about you. Initially people are hesitant to, get to start working or, to avail the services from a startup. But, a well-researched, insightful content will always help to establish that kind of credibility. Thought leadership articles, wherein the founder of the startup is speaking, case studies of the successful, uh, clients and expert blogs will help the startup to position themselves as a industry leader and to build trust in the overall sector. Also, customer education, talking about your product or services, creating FAQs, how to guides, explainer videos, white papers will also helps the startup to, educate the potential customers about the offers. Also, lead generation and sales conversion. It helps, SEO related blogs lead are the lead magnets, and landing pages will also help to drive the traffic and to capture leads. Also, SEO and organic growth helps to build a community and customer engagement, and also to create a differentiation in the market. So this is what Kakhaga does. We have a team of writers and experts from various industries who write on various topics, right from, a BFSI to a lifestyle luxury to agri-tech to NBFCs to tech. We have been working with brands like HDFC, ICICI. We have a global presence. We are working with Natural Diamond Council, which is based out of Canada. We have worked with IFCO Kisan, and we have also done a lot of projects with the government in terms of writing and execution as well. So if you guys have any requirements, you can get in touch with us. Girish has already shared the form with you all, and we can help you create great content and reach out to your potential customers.
Thanks, Sonali. In fact,
Thank you,
we are very
Girish.
lucky in India that we've got such good partners at rupee prices, right? US
Yeah.
startups must be spending 10x of what an Indian startup must be spending on content creation, marketing,
Yes.
tech development. We are very lucky being in India that we've got such good partners working at rupee prices, if I may say. So thank you, everyone. Yeah, we'll go to Susan next,
Thank you.
HR Upstart, followed by Mukund and Kavita. Susan, over to you.
Hi, everyone. Good evening. I'm Susan. Let me just try and share my screen. Give me a second. Please tell me when you can see it.
Yeah, we can see it, Susan, coming.
Yeah. Let's just put that on screen share. Okay, for some
Just do a slideshow and it'll come.
yeah, for some just give me a second. I'm sometimes a little technologically challenged. Okay, there we go. Hi, everyone. Good evening. Once again, sorry, I'm a little technologically challenged. Nice to see some familiar faces here. For those of you who don't know me, I'm Susan De Silva, and I'm the founder of HR Upstart. So I've been in HR for almost 3 decades. And in that time, I have seen it all. I've seen some very brilliant founders, game-changing ideas, and teams that could have done anything, if only they weren't held back by, this one thing that nobody wants to talk about, which is HR. You know what I mean, right? That moment when you hire somebody and he turns out to be a disaster, or when a great performer suddenly puts in their resignation, or when, God forbid, his performance itself drops, right? So, or there are times when you're looking for a policy because you have to talk to an investor about the policies that you have, but suddenly, at the back of your mind, you're remembering all those policies that I started, they're all in this Google Doc, which is lying half finished in my drive, right? So these are the times when someone like me comes in. So during my time at incubation at NSR Cell, this gave me a front row seat of some of the struggles which startups face in HR. There was one common theme. Not one founder was starting his company thinking about doing performance reviews or compliance checklists. Okay, so all founders wanted to build, scale, disrupt the industry. But then reality check, without the right foundation in HR, that rocket ship which you're trying to build suddenly becomes a bicycle with square wheels. It's not moving, or, jhatka de ke aage ja raha hai. A NASSCOM study actually found that about 45% of all the failed startups had issues with team and team management, and that's where someone like us comes in. At HR's Upstart, we don't do just HR. We don't believe in doing the corporate way of HR, in making you fit into a rigid HR structure. Instead, we build HR around the way startups work. We make it lean, flexible, and most importantly, we try to make it like an enabler for your growth, not like a roadblock. Most of our solution, most companies hesitate to take up HR because they think that there is a huge prohibitive cost to it. And but luckily for you guys, our solutions are all fractionalized, right? So you pay for what you use. Our services are fractionalized in a way like, to give you an analogy, let me say like a CA service, right? It's not really, you would have us on retainer, but we'd solve your problems, but we wouldn't be there full time with you guys. So that's what we do. And again, let me throw some numbers, because I know a lot of you. Okay, I know a lot of you think of HR in terms of culture, but let me just give you one story to end with. We had a company 12 months ago who came to us with a fantastic idea. Their team was struggling with the hiring challenges, firefighting every day. And eventually they hired us, handed over all the HR chaos to us. Today, they raised 19 crore rupees, have gotten featured in INC 42's 30 companies to watch out for. And that's what happens when you look at getting on a seasoned HR team onto yourself. If you put HR into place, everything else will fall in the right place. And let's talk if you feel that this is you and you want to scale and grow and need HR help. Thank you, Girish. I probably went over by a few seconds. Sorry, I talk a lot.
Thank you, Susan. Thank you. And it's a very much required and underserved field which you are doing. Yeah. This is last priority for a founder who's grappling with multiple
Girish,
challenges.
my competitor, who my biggest competitor is, it's the founder sitting on this call. Everybody wants to do it themselves, Nobody wants to hand it over to us.
He doesn't realize that he's not doing it also. So
he doesn't realize. They're just figuring it out, doing a chalta kind of work. But, when they really hit a roadblock is when they come to us. Sure. And guys, I'm looking forward to talking to you all and, helping you all through this.
Okay. Thanks, Susan. Yeah, we'll go to Mukund. Mukund, yeah, you can share about NIVAX. And then followed by Kavita and Abhilasha from...
Hello.
Yeah, go ahead, Mukund.
Hi, am I audible?
Yeah, you're audible, but you are Vinay. Yeah, Vinay, you want to go before?
Hello.
Yeah, you are audible, Vinay. Mukund is there. Mukund, you are there.
Hello. So just a minute.
I'm here.
Audible now?
Yeah, go ahead,
Hello.
Mukund. Vinay, you are next. Hi. You are next, Vinay. First is Mukund, then is Vinay. Yeah, go ahead, Mukund.
Hi, this is Mukund here. Am I audible, Girish?
Yes, Mukund, you're audible.
Okay. So I'm the business head at New York Business Advisory and Corporate Services. We are a New York-based international company formation and compliance services company. We have helped almost more than 600 entities to be established across the globe. We work in every part of the globe except India. That's the only country where we don't work. and any of the US sanctioned countries, but wherever you want, we can help you in terms of company formation, compliances, trademarking, whatever you need in any of those countries. We have helped our clients include Upgrad, Ola Electric, Aerochamp, Skylax, some of the biggest names. And for the fact that even Sarthy Ventures, we have helped them incorporate in the US in the last financial year. Yeah, and what we do is we have a very good approach. We don't do any, we always say customize the solution for each of our clients. And I'm always available to help any of all of our clients. Generally, I'm based out of India, so I'm available most of the times. If anyone has any need or any requirement to be established outside of India, they can reach out to us. I think you can get in touch with Girish and he will be able to connect us together. Yeah.
Yeah, thanks, Mukul. And
Yeah.
I must say it's actually US registration, work, everything at Indian prices. So I was, in fact, I would have opened the company 6 months, a year later, but just it was so easy and so seamless and so cheap. In fact, my Indian company setup cost and US company setup cost was almost equal. So thanks to Mukul. He's done a good job, and
Yeah.
plus the compliance bit also. Yeah. So thanks,
Yeah.
Mukul. Yeah.
Yeah.
And we'll surely get in touch. Yeah, we'll go to Biz ASEAN, Kavita and Abhilasha. You can share about ASEAN Business Services. Yeah.
Thank you. Thanks. While Abhilasha is putting up the presentation, my name is Kavita Panda and I'm the Chief Operating Officer of ASEAN Business Partners. Mukul just talked about US. We are all about ASEAN. And thank you, Sarthy Ventures, Girish and Meet for giving us this opportunity to represent ASEAN as well as ASEAN Business Partners. When you think about expansion plans, the first bastion that you are thinking about is US, like we also heard earlier in the presentation about the smart ring. But believe you me, there is another very, very smart and very rich divergent population that is sitting right below our noses, which is the ASEAN, or the Southeast Asia as it's popularly known. It's just about 5 hours of flight away, and it's a block of nations which is rich and thriving. Definitely far better per capita GDP as compared to India, and a population of 6 billion population, and economy which is $6 trillion. Growth rate of anywhere between 5 to 8% CAGR across each of these markets. Sizable population at one end, we have Indonesia, which is 278 million population. To the other end, we have a 0.5 million population at Brunei. We are not including here Singapore and Malaysia because they are really developed markets, but the emerging markets of Indonesia, Philippines, Vietnam, all are very, very important, relevant, and very, very opportunistic. The reason for the same is because of the young and thriving population, growing market, and as we have already encountered in India, it is not a homogeneous market. You will need to learn and adapt to the local customs of each and every country. After all, at one point in time, Jakarta is not similar to that of Manila, and even within Vietnam, one country, you have Ho Chi Minh and Hanoi, which have got different customs and cultures. Also, it's extremely digital savvy. It's not for nothing that Jakarta is called the Twitter capital of the world, because the maximum number of tweets come in from that market. And well, people are stuck in traffic, so they have nothing better to do. Maybe Bangaloreans have a lesson to learn therein. In the other thing that you have to know about all emerging markets is what you see is not what you get. So pretty much like what Mukul was talking about US, it's very simple. It is not very simple market to get into, but if you are patient and you are able to spend that kind of time, effort, and energy in developing this market is ripe for success. This is where we come in. We are ASEAN Business Partners. Very clearly, we will be able to help you at a range of professional services, looking forward from research to incorporation to hand-holding you through the entire process. Who do you work with, who you don't work with, who you shy away from and run in the opposite direction, we will be able to guide you through the entire process. We are not saying that we are experts on everything, but we know who are experts in everything and who is supposed to be worked with and who is supposed to be not working with. We are your catalyst in the market. We are the ones who will help you in getting into the market. We are based in India, myself and Abhilasha in Bangalore, and we'll be able to guide you with the nuances and the cultures of each of these markets, which are very simple. 3 things before we end. 1, ASEAN is a great market, so please look at getting into that market. It's a great opportunity. The second one, it's not easy. It is beyond Singapore and Malaysia. So you will have to look at Jakarta, Manila, Bangkok, etc. Then you will have to do and think about doing business from there with locals, wherein we have presence in these markets as well. The last one is that ASEAN Business Partners is domain agnostic but market specific consultants, and we are here to help you. Thank you so much for your time.
Thank you, Kavita, and thank you, Abhilasha. Yeah. So again, it's very low in your mind share of founders to reach out to ASEAN, but if we have the right partners, it will be a good opportunity for us to explore earlier in our journey. Right? So traveling from US, Europe, and then coming closer to India. So thanks. Yeah, we'll go to Shubham. Yeah, Vinay, your time, I kept you last. Unless you want to go early, I've kept you last, Vinay, if you don't mind. Yeah. So we'll go to Shubham from RNTS. Shubham, over to you. You can share about RNTS.
Hey, hi guys. First of all, thanks Girish for organizing this, and thanks Meet for including us. I think it was an amazing session. For founders who want to learn more about fundraising and product, I think it was very informative. And yeah, I think thanks for including us as partners, and whoever is the partner here. I think we're here to serve the ecosystem, to help the ecosystem grow, and that's what we also do. All right. So I am Shubhang. I am a quick brief about myself. I'm a graduate of XLRI. I did my MBA in HR, and after that, I worked across different organizations. I've been the HR head of one organization. I've been a consultant at Aon, and I have, like, my last stint was heading Bajaj Tuition Center from an HR standpoint. Before me and my business partner decided to, start our own firm, which is called Retius Advisory. Um, I'll keep it very brief. We are a full stack HR consulting firm, much like what Susan does, but slightly different as well. Basically, as I said, I've been an HR head, so I've leveraged that expertise into building solutions for startups in general. So that's what we do. One, we're a full stack HR consulting firm, things around performance management, careers, policies, processes, all of that is something that we do like a back of our hand. I've been a consultant at Aon, and hence what we also do is a lot of compensation benchmarking work. So that's more from a consulting standpoint. What we also do is we understand a lot of new age startups, face this challenge of hiring the right set of talent. We do that, but what we also do is we predominantly work with global firms in setting up their technology center in India. So when it comes to hiring, we are largely focused on global firms which are setting up their technology center in India, and technology firms in India who are wanting to ramp up their tech teams. We typically specialize in tech product data kind of processes from a recruitment standpoint. So yeah, that's pretty much in a nutshell about us, what we can do. And I think Meet was kind enough to reach out to me saying, you know what, Shubhang, for our ecosystem, if you can give something in return or something which is very, very exclusive for Sarthy. Guys, I think what we can do, happy to do that. We want the ecosystem to flourish. We want smaller startups to grow into bigger startups. Happy to, give some form of discount, 10 or 15%, or depending on, I think happy to do that. We can discuss it offline if anyone's interested, but we'd be happy to cut off something from our services for, smaller startups. Our clientele includes companies like Swiggy, Zepto, Cult. These are some of the bigger clients in India. Lending Card, Acco also. Our smaller clients are, of course, many. Our global clients include companies like Toku, Fleek, etc., which are basically globally Series A/Series B funded organizations. And we've set up HR for them. We have helped them recruit the right set of people. So yeah, that's what we are. I am not sure if I've overshot time, Girish, or not. Unfortunately, I didn't time myself, but I think I kept it brief.
Perfect. Thanks, Shubham. and we'll
Perfect.
surely be in touch. Yeah, we go
Awesome.
to
So guys,
MGCO
just
Legal.
Girish, one thing I think in case anyone wants to reach out to me, either reach via Girish or Meet, or I think there's this form
There's
that
a
any which
form.
ways
There's a
Girish
form
has
I've
shared. So
circulated. Yeah. Otherwise, also your websites are shared, right? In the
perfect.
deck.
Yes.
People will get it.
Awesome.
Yeah, MGCO Legal. Rohit Pranish, who's here? Rohit is here. MGCO Legal. Okay, I'm not seeing Rohit or Pranish. Over to you, Vinay. You can share about Collab Cafe. Yeah. So Vinay, thanks Vinay for building the creatives for this.
Hello.
He's
Yeah.
a
Hey.
creative marketeer. So thanks very much, Vinay, and over to you. So Vinay wears multiple hats. Today he's wearing the Collab Cafe hat. Yeah. Over to you, Vinay.
Yes. So, hi, my name is Vinay. I'm the founder of Global Brands Connect, and today I'm here to present our concept called as the Founders Collab Cafe, where we are a pure performance marketing company, and we create a lot of opportunities for startups, MSMEs, and a lot of luxury brands. So today, what we are in, okay, we are build a synergy between yacht clubs and chartered flights to Mercedes. So there's a collaboration happening today, which we are witnessing. So what we do is, okay, at Founders Collab Cafe, we understand, we deep learn about the founders, what is their required collaboration, what is the kind of a client they want to work with, and we fix a high potential meeting with that prospect or the collaborator at a very premium cafe or a lounge. And we work on pure performance. Okay, once a business gets converted, we work on a success fees based pattern. So in a quarter, we commit every founder to get minimum of 60 meetings. So in the 60 meetings, at least if it is a 10% is a conversion, that's the kind of a growth pattern what we want to align with them. And we are not a digital marketing company. We are not a event. We are a hardcore sales performance company. So we work as a growth partner, not as an agency. So we align with the growth and we work in that. Our onboarding is very, very simple. We charge quarterly 5,000 rupees, and we fill in high quality meetings. And the business gets converted as a business. We work on a success fees. So that's how we work. Very simple, straightforward, and you can take us with confidence because we have been recognized as most admired marketing leaders globally for the work what we do. And yeah, and we have got a lot of testimonials for the same. You can just check with the LinkedIn in our profile, Vinay, the brand creator. So you'll be getting a lot of testimonials. And we also curate high profile mixer summits. So create more awareness of the founders, because most of the founders are doing really good, but they're not visible. To create more visibility for them, we curate bespoke summits for them. And that is a part of it. Okay. So that's how we do. And that's what we are extremely passionate in what we do. Thank you so much for the opportunity, Mr. Girish, and an immense pleasure connecting with you all.
Thanks to Vinay. So he's Vinay with a W, don't forget, because you might mistake putting V-I-N-A-Y. He's Vinay with a W. Thanks. So he makes you win with his work. Yeah. Yeah, we go to MGC, go legal. Yeah, you can go ahead and share Rohit Prathri. Yeah, go ahead, Rohit.
Yeah, hi, good evening, everyone. This is Pranish from MGCO Legal. We're a law firm based out of India, Dubai, Spain, UK, and Colombia. And we're very fortunate to be partners at Sarthy Ventures. And very unfortunately, we come from a very infamous community. Everybody hears lawyers and they think there's something wrong. And most people consider lawyers to be ex post facto dispute resolution, or rather maybe disruptors, which is not the case. So purely as a corporate commercial law firm, assisting startups for the last 5 years, we realized that there's a lot of legal foundation and strategy that goes into every single startup that is created, right? Right from the day that the foundation is laid in terms of strategy, incorporation, compliances, regulatory approvals, and then internal structures as well. So I will give you a very random example. A lot of startups will come up to us after they've already screwed up one or the other aspects of either their foundation or their compliances or their contracts or their understanding of multiple parties involved in the natural course of any business. Now, one thing that we need to tell them is you need to be hyper cautious of what you're doing, who you're doing it with, and what are your terms. Largely for the reason you're calling yourself a startup, you're not a traditional business. Because you're calling yourself a startup, there's a lot of structure that your investors are going to have to be privy to. So because we also assist startups in fundraising, we realize that due diligence processes are often complex because startups don't have answers to a lot of questions they ask, because they're either verbal understandings or in fact, there's no understanding at all. Not just that, even when you go through a due diligence process, finance isn't taken care of, compliances aren't taken care of, human resource policies aren't taken care of. people usually shy away from paying the right kind of tax. People don't understand what an EBITDA calculation is. People don't even know how to value their startup in the right stride, and what are the activities that they should be undertaking to create the right value around these startups. This is the kind of strategy that we like to create for our startups. And not just that, we also create business processes. So even if 5 years down the line, the founder is to be taken out of that equation, the startup would run just the same, which is exactly what investors are looking for. And startups in their inceptional stages sort of entirely let go of. So we, as a corporate commercial law firm, assist you with everything finance and legal, international expansion, compliances, regulatory approvals, so on and so forth. And we would love the opportunity to work with you, discuss with you, and grow with you. But thank you so much, Girish, for giving us the opportunity. Always looking forward to nice conversations.
Thanks, Pranish. Thanks. So yeah, we've completed all 9 partners. I again repeat, if you're interested in any of their services, fill the form, or you can go to their website also and check that. Yeah. So I'll first of all like to thank Meet for working so hard and building this up. So thank you very much, Meet. He heads the partner program in Sarthy, and you can put your number also in the group, Meet, if anyone wants to get in touch with you. He'll happily support you to reach out to any of our partners or anything about Sarthy. Meet, just put your number, and you want to say anything, you can say Meet.
I think I've shared my number and it was a wonderful session. I hope everyone liked it.
Thanks and compliments, Meet, for your hard work to get it up to here. So yeah, Rajesh is here. Rajesh heads the Minds program, and I think there are a few Minds startups also. There are 2 Rajeshes. Yeah, I'll come to you, Rajesh Gupta. This time it's Rajesh Badgeri. So I'll come to you, Rajesh. Yeah, over to you, Rajesh. You can share anything you want to share about this today's session. Or yeah, over to you, Rajesh.
Well, very, very interesting the way it turned out, I have to say. I think I've been in the startup ecosystem almost like a 10, 12 years with my second startup, while I also kind of a lead Minds program at Sarthy. The collaboration, people helping each other and knowing the right contact at the right time makes a lot of difference. We always, I think, it's an ecosystem that has matured. I think it brings a lot of value. It was a wonderful session from both and all the partners, and the depth of the breadth we come to know in these sessions, what all things happen. You don't know when you have to reach out to some of them. Very good. I think back to you, Girish.
Thanks, Rajesh. Yeah, Rajesh, you can also, over to you. Rajesh is a mentor investor with Sarthy. He's invested in some of our startups, and he's also a tech mentor. So any tech challenge we go to, in fact, recently, there's a world's first AI software engineer. So Rajesh is helping us evaluate that startup to confirm whether AI is at the core or is it gas. So over to you, Rajesh.
Thank you, Girish. Thank you so much. Good evening, everyone. Interesting discussions. With my experience of more than 4 decades in the industry, I just want to share 1 or 2 tips what you should do. Do not hesitate to reach out to anyone of us at Sarthy or partners. I know startups always have problem with respect to funding issues, money is not available. Don't worry about it. We at Sarthy are always available. As Girish mentioned about technology-wise, solutioning and other things, we are always there. We'll guide you, we'll help you with bare bones. You can get your MVP done also because you don't have to spend lakhs of rupees onto it. But I think one second thing which I want to tell you is that focus on how you can bring in your AI into the solution. If it's IT enable, which I think many people talk about it with respect to customer delight and so on, bring those things into your solution, which will help you. Don't worry about it if you don't know AI. I've been playing with AI since 1989. Some papers have been published in my Stanford and MIT universities. But don't hesitate, please. Reach out to us, we'll help you. Don't worry about money and so on, spending feature. Girish and I spoke about many times onto it. We are here to help each one of us so this ecosystem grows and then we flourish together. Thank you so much. Thank you, Girish.
Yeah, thank you, Rajesh. Thank you. Yeah, there are so many Priyanshu, so I'll ask the original Priyanshu to please stand up and share his comments.
Hello, hi everyone. This session was quite enriching in terms of many different aspects from various people, various professionals at expert level. So quite enriching from me as well, trying to get a sense from all of them. having to understand the different aspects from each book, and quite useful to me, I hope.
Okay. Thanks, Priyanshu. Yeah, and Naveen. So Naveen is a cohort 15 startup, and in fact, he was excited when he found the startup club. He's worked with him. So go ahead, Naveen. You want to share anything? Naveen is from Hap Sales. He's a CRM startup.
Hey, hi, Girish. I missed that. I'm sorry. I heard my name. So let everyone know that I'm just being called up and you've not told me what to speak. So what is it about?
No, whatever you want to share, if you want to share anything.
I think, yeah, thanks for, so I'm part of the cohort which recently started with Sarthy. I think it's a great opportunity to, and the cohort name is Minds. So we get an opportunity to interact with great minds out there who's been doing and supporting startups for some time now. So I'm part of the cohort now, and you just started the journey. Let's see how it is. I'm excited about the future, what it holds. And I think these kind of initiatives definitely help Girish for setting it up. And in fact, some of the partners who came on, so you brought on Startup Zone. I just mentioned there that I've been working with them for the last couple of years. They've been serving us, a great organization. So similarly, I look forward to some of the partners who can add value to our journey. So thanks so much for organizing these events.
Sure, Naveen. Yeah, thank you. Thanks for joining. Yeah,
Thank
anyone
you.
else wants to share? The floor is open for anyone else to share anything. Before we close, we have another 7 minutes, so we are perfectly on time.
I just noticed that there are a couple of things that we could use ourselves. So yes, we have definitely taken them down.
So that's the ecosystem and collaboration building, and we are doing it subtly. See, we don't want to make money in ecosystem building. We know what we do. We fund investable startups and make startups fundable. The ecosystem is a byproduct of what we are doing. That's the objective, right? And the partners are available. Thanks to Meet Mata for pushing us to bring this collaboration, but otherwise it was one side partners and one side startups. Just bringing them together on a platform. That's what we've done today. Yeah.
Yeah. And the second very interesting question, Priyanshu, how could you clone yourself so many times?
So that actually bugged me also, but that's a bug in Zoom only. I was not able to change that. And it's also being broadcast on YouTube Live. So first 5-7 minutes was slightly stressful for today. Yeah. Anyone else wants to share anything before we close? No? Okay. So thanks everyone, and happy Women's Day to all the women in the room. We are 1-2 days away, but wish you happy Women's Day and may you prosper and grow and fulfill your dreams here. Thank you and God bless you everyone. Thanks. Bye.
Thank you. Bye-bye. Have a
Thank
good
you. Bye-bye.